back with Blank with Mike. I'm your host, Mike. In this episode, we're going to talk about what it means to be a bull or a bear within the stock market. So strap your seats in. Let's get ready for the show. Okay, so you're interested in the stock market and you got some investments going. There are certain stocks that you like. For example, Apple. Everyone likes Apple. There's a million and one videos on just Apple. So, you like Apple. Now, you want to talk about Apple non-stop. Like, you love Apple like there is no other tech company within the cell phone, headset, tablet, computer, nothing else. You talk about Apple like there is nothing else in this world. That in turn means you are very bullish towards the Apple company. You love the company. You want to talk about nothing but the company. So you hype up the Apple company. It's not necessarily a bad thing. Don't get me wrong. I think being bullish is very good in certain situations. That's a company you like. It's a company you own. So therefore you want to see that stock rise, go up, 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 up. And that way you can enjoy the fact that you talked that company up. You get a slight little pep on the back, pat on the back, pep talk type thing. But also you bought it at $20. Now after all this bullish talk about it, you're seeing that stock rise up to $100. Boom. You want to sell. It's a good idea to be a bull. In certain cases, the market itself can sometimes be considered a bull market because the prices always skyrocket. They always just roofs. There's no sky the limit. It's just going up, 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 up. Now, that's pretty much what it's like to be a bull. Now, on the other side of that spectrum is the bear. Bears are pretty much ones who are pessimistic about the stocks. Like they're seeing Apple, it plateaued at 100. Then they're seeing it slowly drop down to like 90, 80, and they tend to be like, oh no, 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 sell, 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 because they don't want their $20 investment to be worth $10. I mean, they also don't want that. They want that 100, but they think that's pretty much the cap. Like it's not going anywhere. It's just going to start falling down from now. So we're out of here. Now the market also can be skewed as a bear market. It kind of correlates with the economy, which in a sense is true, in a sense it's not, at least the research I've been looking at. Because right now our economy is in the trash. I mean, let's face it, people are losing their jobs, their fear of losing their homes by the end of this month, which sucks if you ask me. I find myself fortunate I'm not in that situation. I've held a job throughout the pandemic. I live with my girlfriend who owns this house. So I kind of find myself in a vicariously good position in that sense. But I know people who have lost their jobs. I know people who are pretty much going to be losing their homes, and my heart bleeds out to them. Now, when I bring that back into the market nowadays is we're like on a bull run up. The market doesn't want to be a bear. It wants to be a bull right now. Me personally, I want to say we're in a bit of a bear market. My point of view. You know, this is not the actuality. I'm not a financial advisor. All that, wonderful nonsense that I have to state and all that good stuff. Kind of afraid in that the fact that right now the market's trying to outdo the economy. And even though I feel we're pretty much going to do for a market crash, I'm not selling my stocks. That's not what I'm looking into. Even if we do come into a crash where you're going to see a lot of red days, I'm going to buy more. It kind of contradicts how you want to look at the stock market. I love red days. Like red days, yes. Gimme, gimme, gimme. Not in the sense that my overall portfolio is going to drop down. It's the fact that the red days mean the stocks are pretty much on sale. Like, they're trading lower in price, so it kind of triggers that, like, okay, do I buy, or is that too good of a deal? You know, so I like the red days in stocks so I can buy more, increase my position. On the green days, I also like, because I look at my portfolio and I see, like, you know, right here at the start of the day, end of the day, it's up here because of the green days. You know, it's just how you want to play on that. Me personally, that's how I do it. Now, I like to be bullish on a certain stock. One in particular that I'm very happy to reveal that I found, finally. If you're on the West Coast, you know what I'm talking about when I say Jack in the Box. Ticker symbol Jack. Now, I love Jack in the Box. Give me an ultimate cheeseburger, a large curly fry, and a large Dr. Pepper. I'm a happy camper. Give me the ultimate breakfast sandwich, hash brown, and a large Dr. Pepper. I'm a happy early morning camper. Now, I'll put it up here on the screen so we can see. It's not trading at a good price, in my opinion. But I want this stock. I bought a little bit of it. It's not, you know, I have a fractional share, so I don't have a full share, but I have a little bit of it. I like this stock. I like this company. I want to be a franchise owner of this company because the nearest one to where I am right now is in Murfreesboro. I'll show you on the screen right here. It's a long drive. It's worth it to me, but I'm not willing to drive that for Jack in the Box. At least not today. Maybe tomorrow. Let's work tomorrow. Now, I want to talk bullish on this stock in particular because, again, it's a company I love. I love Jack in the Box. I love their foods. I love their restaurant. I love it. I love the commercials, the whole 9 yards. So I'm going to really do a deep dive investigation on this company, and I'm going to bring out some highlights with you that I find in my information, my research. You know, so look out for that video. It's going to be a while before I get it up because I'm molding my research strategy, so to say. That's a company I want to talk bullish on. Now, bearish, like I said, I'm kind of bearish on the market itself, but I'm not selling anything. So I'm kind of quasi-moto bear bull. You know, it's just, again, it's however you feel like, because this is going to be your portfolio. You know, what I show on my channel, my episodes, is my portfolio. I'm not just showing off, you know, person B's portfolio. This is Mike's portfolio. Keep an eye out for that video as well, because I will be doing a portfolio reveal of both my Webull and my Robinhood. When I get around to it, I'm not quite ready for that just yet, because I don't want it to be like me showing off or boasting or any of that nonsense. But at the same time, I want to show it to you guys so that way I'm fully transparent with you, my viewers, my family. So that way, you know, kind of see that, okay, Mike's trying, he's getting there. So if Mike's able to do it, how come I can't do it? That's my thought behind it all. I could be wrong, could be right. Take it as you wish. But that's the video ideas I have in the future. Probably recording probably this week, maybe, I don't know. But, you know, that's my definition of a bull versus bear. Now, it's probably more in depth, I'm sure, but that's just like the tip of it. That's so you understand the distinguish between the two. Whenever you watch a video talking about bulls or just bears, or if someone mentions like they're very bullish or they're very bearish on this, that'll pretty much give you a broad spectrum. So I hope you enjoyed the video, guys. See you in the next one. Bye.